As investors, we want to be buying strong stocks. But there's a good time to do that and a time that's not so good. I'll show you the difference, and then I'll do my analysis of the markets. We'll look at the stock markets, commodity markets, Bitcoin, and the bond market. And then finally, we'll look at the trade of the week. That's all coming up in this week's Stockscores Market Minutes. So when should you buy a strong stock and when should you sit back and be patient? Well, the key thing to think about is that stocks move in upward trends in waves. There's a wave up, then there's a pullback, and then a wave up and a pullback. And you'll see that cycle over and over again. And I'm going to show you on a chart in just a moment. So whether you are buying a long-term investment for your retirement portfolio, whether you're doing a swing trade to hold for the next few days or a day trade to hold for the next few hours, there's a simple concept to keep in mind, and it revolves around trend lines. So let's take a look at the notes here. We want to buy strong stocks when they are on sale. And by this I mean they pull back to the upward trend line and then break the pullback. We do not want to buy stocks when they run away from the upward trend line, as it's likely that they will pull back soon. This is the emotional waves that come in and out of the market. Ultimately, we're trying to balance the reward potential on the trade with the potential risk. So we have a chart on screen here of Microsoft, and what I'm going to do is show you how to draw a trend line. So we begin by starting at the low point on the chart and just let the line come up until it hits what we call an inflection point. So this point right here is an inflection. And then I can carry that line out, and what you'll notice is price runs away from the trend line and then comes back to it. Now remember, I use 2 points, the starting point and the first low point, the first little valley. And from that, look at how it runs away and it comes right back to the trend line and bounces off of it. This is a time to be a buyer. This is not a time because you are far above the trend line, which means it's likely that it will pull back. Here you see it again. It runs away from the trend line and then it comes back to the trend line. I'm interested in being a buyer at the trend line, but not when it's far above the trend line. Let's look at a few more examples. Here we have a mining stock on the Canadian exchange. And again, I'm going to start my line at the low point. And I'm going to let it hit this little inflection point here, carry that line out, and look at how reliably that worked. Now, it's not 100% close. Right here, there was a little distance away. But what's key is when you are far above the trend line, do not buy. When it pulls back to the trend line, watch for a buy, but wait for a break of the pullback. So that's a good spot. There's a pullback. There's a break of the pullback. That's a good spot. There's a pullback. There's a break of the pullback, or even here, a break of the pullback, and it goes up. And each time, what's nice about this is you can manage risk effectively by putting your stop just a little bit below the low of the pullback. And that way you know what your downside is. If the trade doesn't work and it goes down through that floor, you're going to get out at that floor and take a small loss. One more example, and this is a weekly chart of Bitcoin, or of the Bitcoin ETF. And there's our upward trend line, runs away, pulls back, breaks. Again, this is a weekly chart, so this is very long term. So we had our initial buy point here when it broke out, and then we had another one here on the break of the pullback, and another one here on the break of the pullback. And that led into this very strong gain, which is actually still in an upward trend, and I'll talk about that a little later in the video. All right, let's get into this week's market analysis. We're going to take a look at the Stockscores website. I'm going to pull up SPY as my first chart. And there you can see the upward trend line on SPY. You can see it runs up, pulls back, runs up, pulls back, runs up, pulls back, but it ultimately broke the pullback on the daily chart. Now, if I go to the weekly chart, what you see is the upward trend line is actually way down here. So the market has a long way to fall until it comes down to the trend line. Now, it could be forming simply a steeper upward trend line. We don't know that, or we can't say that until we go to new highs. But I do think it's risky in this market because we have run up so quickly and we are so far above this longer term upward trend line that I'm concerned we could see it pull back all the way to that. Now looking at the short term chart, some decent news this week because the downward trend line was broken a few days ago. We've been building rising bottoms, that's optimism. And then on Friday, on a weak jobs number, we saw the market gap up through that resistance. I think there's a decent chance we pull back a little bit, but ultimately more likely that this market goes up in the short term. Now let's take a look at the NASDAQ QQQ and let's go 1 month chart. And there you can see something similar. We broke out strong gain there from optimism, having recently broken some downward trend lines here and here. And so we're building upward momentum, but the upside is a little bit limited because of this trading range over here. That's going to be resistance. So in this zone here, that's going to limit the upside. Let's take a look at the 3-year weekly chart. I can start my trend line at the bottom, let it hit these points as close as we can get. You always want to draw a line that best approximates as many points as possible. And so there's still some downside until the NASDAQ hits that upward trend line. So although we've bounced back the last 2 weeks, I'm not convinced that we don't have more weakness ahead. I think we could come back to test that line. Now the small cap market looks a little different. You'll learn later in the video why, but the small cap market, the Russell 2000, I would say has a better looking chart. It's a little smoother and it made a better break from a nicer pattern. That's the short-term picture. Looking at the long-term picture, you can see that we haven't made the gains in the small caps, which means we don't have the downside risk as well. And I like that there is momentum building. And let's just see if we can get through this high point, then we're going to be into that cycle of an upward trend. As I said, I will show you later in the video what chart is critical for this particular sector of the market. Now, the TSX, which is heavily influenced by commodity stocks, 1 month time frame, kind of sideways, so it doesn't look good or bad. 3-year time frame, it's simply knocking on the door of that long-term resistance. So when markets rally into resistance, they get stuck. We could go sideways for another month. We could go sideways for 2 more weeks. Hard to say, but the trend is still up. We're just taking a little pause here. Let's take a look at gold, which had a bit of a breakdown the last couple of weeks. Whoops. Here is my upward trend line right there. And my concern is that we've broken through this upward trend line from a falling top on the daily interval. That could mean that gold's going to see some lower prices. If we look at the 3-year weekly chart, you see that our trend line on the weekly is quite far down. So don't be surprised if gold pulls back to that mark. Doesn't mean the long-term trend is over. It means we're going to recharge a little bit here, most likely. Now, all bets are off in terms of a pullback if this downward trend line is broken from a rising bottom and we're able to move through these highs. But that's a big if because I think on the balance of probability, it's more likely to go lower. Now, the oil market, it suffered a bit worse of a breakdown. So here is this upward trend line. I started here and I used this inflection point, and you can see that that's been broken this week from a falling top. So that's a negative. Now there's a more shallow upward trend line there, which I think will be where we see support found in the oil market, and perhaps it'll hold that and bounce off of it. If we look at this longer term chart, we do see a healthy long-term upward trend line like this. We see horizontal resistance there, and so it's quite likely we're going to pull back to this, bounce, and then move up. So I don't think there's a lot of downside for the oil market, but I do suggest a little bit of caution. US dollar has been quite strong. It's in an upward trend on the daily, but if we go to the short-term chart, the intraday chart, you can see that we broke down through some support a little bit on Friday. And let's now look at actually we're going to look at Bitcoin first because it had a little bit of an up move late in this week on Friday. And I know a lot of people get excited about that, but hey, we still haven't broken the downward trend line. We're still in this little downward sloping channel. It's more obvious if we go to the 1 month chart. I can start at the high, draw a line across those tops, and see how we're still below that line. So that is kind of a critical thing. We need to break that line from a rising bottom before we can get optimistic that Bitcoin is going to continue its long-term upward trend. Now, where is support? Well, if I start like this and draw that trend line, you can see that we just touched it. So we could actually hold this here. I think it's going to take a little bit of time, a little bit of work, because the gains were so strong. You're just working through normal profit taking in the market. People make lots of money. Some people want to take money off the table. It's just normal emotion and human behavior to have that happen. All right, last chart we're going to look at, and the one that I was hinting at earlier, is the TLT chart. This has a large effect on the small cap stocks because they are more interest rate sensitive. Now, this is an ETF that is based on the 20-year US Treasuries. It's a good predictor of future interest rates by the US Federal Reserve. And what you can see is that this week it broke through on Friday on that weak jobs number. It broke through resistance from a little rising bottom. That tells me that we could see the bond market start to move up in the short term. Now, let's not overstate it, because the long-term chart of the bond market is still in this downward trend. It's got a lot of work to do to break that, but it could be building a rising bottom on the weekly, and then maybe in a few weeks, couple months, it could break that downward trend line, and that will be supportive for the small cap stocks in the US. All right, so let's take a look at my ratings. Neutral on all time, or neutral on both time frames for all equity markets in North America. Gold, I've lowered my rating in the short term to neutral, long term bullish. Oil, dropped that, short term to bearish, long term neutral. US dollar, short term neutral, long term bullish. Bitcoin, still in the short term bearish. It is trying to reverse, but it's got some work to do, and long term neutral. And bonds, I've upped my short term rating to neutral, but still bearish in the long term. All right, now let's take a look at a trade of the week. I'm finding that the best trading in the market right now is quite short term. And the reason is simple. The trend is against us in the longer term. We've had this pullback underway for the last few weeks. And so what you have to do then is trade where there is an upward trend. And sometimes that's only in the very short term on what I call alpha stocks. Alpha stocks are those that are trading abnormal volume with strong liquidity. There's a handful of them every day, and that's where my focus is. And so this week's trade of the week is exactly that. This is a 1 minute, one day chart. You can see on Friday, the volume was much greater than normal. The stock moved up. I don't want to buy the move up. I want to buy the break of the pullback. Just like I talked about for longer term buys, we can do this for day trading as well. So we buy the break of the pullback. It had a nice little move over the course of maybe half an hour, but for every $100 risked, it made about $400, almost $500 of profit. So you risk $1,000 on a trade like this, you make $5,000. You want to learn more about how to do that? Go to my website, stockscores.com. The trader training section will show you some of the options available to you. Hope you've had an enjoyable time with this video. If so, click on the like button, leave a comment. It helps the YouTube algorithm pick up this video and give it to more people. And I think that's what I would love to see, and hopefully you think it's useful. As always, have a great week in the market and trade well.